Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden inside corporate filings. Today, we're diving into RYVYL Incorporated's latest proxy statement, and let's just say this one's got more twists and turns than a poorly written executive summary. Get ready, because we're about to unpack some interesting decisions the company is making about its future, and trust me, it's not all sunshine and rainbows. Before we begin though, if you love getting these unfiltered insights into how companies really operate, make sure you're subscribed. And hey, we've got a great community over on our Discord channel, linked in the description below, so come hang out with us there. So, RYVYL Incorporated, a company whose name you might recognize from its past ties to payment systems, is getting ready for its 2025 annual meeting of stockholders on the 23rd of October 2025. This isn't a physical get-together though, it's fully virtual. Now, why is this filing so interesting? Well, it outlines some pretty significant proposals that could really change how RYVYL operates, especially because they're dealing with some serious challenges keeping their stock listed. First up, they're holding their annual election of directors. They're putting forward 4 names for your approval to hold office until the next annual meeting. This is pretty standard stuff, but it's worth noting who's on the board and their backgrounds. Then Therese the proposal to ratify the appointment of Simon and Edward LLP as their independent auditors for 2025. This is basically a nod of approval for who's going to be checking their financial homework. Now for the big one, proposal number 3, they are asking stockholders to approve an amendment to their articles of incorporation to carry out a reverse stock split. What does that mean? It's like taking all the small pieces of a pie and putting them together to make fewer, bigger pieces. They want to do this at a ratio of between 1 share for every 5 and 1 share for every 15. The board gets to decide the exact ratio and when to do it if they do it at all. Why on earth would a company want to do that? Well, the main reason is to boost their stock price. You see, RYVYL's stock price has been hovering below $1 for quite some time. The Nasdaq capital market has a rule that a company's stock price needs to stay above $1 for a certain period to remain listed. They received a notice from Nasdaq about this very issue. If they don't get their stock price up, they could be delisted, which is a pretty big deal for trading and investor confidence. But this isn't a magic bullet. The filing warns that a reverse split doesn't guarantee a higher stock price. The market price still depends on many things, like the company's financial performance and the overall economy. If the price doesn't go up as much as they hope, their market value could actually shrink. It also mentions that this could create more odd lots of shares, which means smaller numbers of shares that can be harder and more expensive to trade. So while they hope to avoid delisting, there are definitely some downsides to consider. Therese also a mention of something called July warrants. These are options that investors bought back in July for a certain price. The reverse stock split could mess with the exercise price of these warrants in a way that might mean the company gets less money when they're used. That's not ideal if they're hoping to raise funds. And then we have proposal number 4. This is where they want to increase the number of authorized shares of common stock. Right now they have 100 million authorized shares and they want to bump that up to a whopping 500 million. Let's look at their numbers. As of the 10th of September 2025, they had over 31 million shares issued and outstanding. They also have shares reserved for warrants and stock awards. After accounting for all that, they had about 51 million shares of authorized common stock that were unissued and unreserved. So, even before this proposed increase, they had quite a few shares they could issue if they needed to. The reason they give for needing more authorized shares is to have flexibility for future financings, acquisitions, and for issuing employee stock awards. They're talking about an enhanced plan involving digital assets and a crypto treasury allocation policy. They believe that without enough authorized shares, their ability to raise capital and pursue these new business avenues will be severely limited. They really seem to be pushing for this as a crucial step for growth and for attracting talent. Let's peek at who actually owns the company. Freddie Nissan, the CEO and a director, has about 6.7% of the shares. S8 Global FinTech and RegTech Fund is a major shareholder with over 11%. Therese also Arena Investors LP and Greenbox POS LLC, which is managed by Ben Erez and Freddie Nissan, who each own 50% of it. So RYVYL got the exec team, some investment funds, and a company they manage all holding significant chunks. Now, let's talk about what the folks running the show are making for 2024. Freddie Nissan, the CEO, took home a total of $542,029. Ben Erez, who was chairman and EVP, made $543,602, but he resigned as of the 31st of August 2025. George Oliver, the CFO who joined in October 2023, made $366,752 in 2024. Min Wei, the QO, resigned in June 2024 and made $378,240 for the part of the year he was with the company, plus some severance. Interestingly, they've included a pay versus performance table, which is a requirement now. It shows how much compensation was actually paid to their top executives compared to the company. Performance measured by things like stock price and net income. For 2024, while the CEO's compensation actually paid was around $440,000, the company itself reported a net loss of almost $27 million. In 2023, compensation was higher at $766,000 for the CEO, and the net loss was even larger, over $53 million. This table paints a picture of executives getting paid even as the company struggles financially, which is always a tough pill for shareholders to swallow. The non-employee directors are also compensated. For 2024, directors like Genevieve Bear, Ezra Laniado, and David Montoya received cash fees and stock awards. Though it's important to note that Bear and Laniado resigned in August 2025 and Montoya resigned in June 2025. They're getting paid pretty well, with cash fees of $2,500 a month, and that same amount in stock, plus extra for committee chairmanships. We also see some related party transactions mentioned. The company repurchased shares from Privco, an entity controlled by Erez and Nissan. Therese also mentioned of Freddie Nissan's brothers being hired, and then both resigning. These kinds of transactions always raise eyebrows, as they can potentially benefit insiders at the expense of other shareholders. The company did buy back shares from Privco, but not all of them have been accounted for yet. Now, let's put on our analyst hats and look at the bigger picture. RYVYL Inc. is clearly in a critical phase. Their primary goal right now seems to be survival, specifically by avoiding delisting from NASDAQ. The proposed reverse stock split is a direct response to the low stock price, a common tactic for companies in this situation. However, reverse splits are often viewed negatively by the market, and Therese no guarantee it will fix the underlying issue if the company's business performance does improve. The increase in authorized shares, while framed as a necessity for future growth and strategic moves like exploring digital assets, also gives the board more power to issue stock. This could dilute existing shareholders if not managed carefully. Looking at the financials, the fact that they reported net losses in both 2023 and 2024, while executive compensation remained high with some significant payouts to departing executives, suggests a disconnect between leadership rewards and company performance. The pay versus performance data clearly highlights this. The company's direction seems to hinge on these controversial proposals. The reverse stock split is a risky maneuver, and the increased authorized shares could be a double-edged sword. The success of their enhanced plan involving digital assets remains a big question mark, relying heavily on their ability to secure further funding. The key risks here are the potential failure to regain compliance with NASDAQ's listing rules, which would severely impact liquidity and investor confidence, and the dilution risk associated with increasing authorized shares without a clear and promising path to profitability. Ultimately, RYVYL is navigating a tough spot, trying to correct past issues while charting a new course. As a shareholder, you do want to see a solid business strategy that generates actual profits, not just cosmetic fixes like a reverse split, and much clearer alignment between executive pay and sustained financial health. Alright, that is our breakdown of RYVYL Inc.'s latest filing. What is your take on these proposals and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives like this. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching. See you next time.